Now, to help us unpack the next conversation, ladies and gentlemen, this time focused on the future of space as well as the shared economy, defining new ways for occupying in Africa, we're going to have a panel which will be moderated by Dolapo Omidiri, who's the founder and team lead at Estate Intel in Nigeria. Participating in this conversation will be Greg Schweinbeck, who's the CEO of Houseman Group in Kenya, followed by Nena Alinta, who's the head for CRES and research at Cushman and Wakefield Broll, Nigeria, as well as Yossi Dayan, the head of growth for WeWork. Ladies and gentlemen, please warmly welcome them on stage. Get settled and, of course, be keen to learn, interact, and participate in this upcoming conversation. A warm round of applause, please, ladies and gentlemen, for our panelists on stage.
So good morning, everybody. Thank you for allowing us to speak here. We're going to be talking today about global occupier preferences. I think over the past few years, we've seen that the typical occupier, not just in Africa, but across the world, their needs are changing. Now, people are not, there's less of an affinity to just taking out space that's just simply brick and mortar, but tenants are increasingly wanting something more experiential. They want to see their space as a service, and they would also prefer a more turnkey solution. I think within Africa, that also presents quite a unique opportunity. One, because a lot of the corporates that come into the continent are coming maybe for the first time, and they're seeing that their team might be expanding from a 2-man team to a 50-man team, and they're not sure how long that's going to take. So those type of services are really important within Africa. So I'm going to start with by speaking to Yossi here. Just up until yesterday, he wasn't going to be on the panel because of the global situation, I'll say. But we're very happy to have him here. I think what I would really like to dig in first is to talk about how WeWork adopted their global strategy and figured out what model was going to work for South Africa and, I guess, across the continent.
Thank you very much. It's a pleasure being here, and we were under quiet period until yesterday, but now we're not, so I'm happy to be here. And I'm happy to address any questions and free to speak afterwards as well on more specific issues. So to answer your question, I think there's kind of two things that we look at. One of them is basically the long-term trend of workforce mobilizing towards urban environments. So we've seen this in the developed world, and we're seeing this more and more now in developing regions, including Africa, where you're seeing this trend of people moving into urban environments. And when you ask yourself, why are people moving to urban environments, to cities, it's because they see that through better opportunities. And when you dive deeper into how these opportunities get created, it really is because of human interaction. And that's what WeWork does, in the essence of what we do. We create human interactions in our spaces, and I think if any of you have been to our new location in Rosebank, you see that place, big, bright, vibey, people are interacting, and that's how we design our spaces. That's how we create and activate our spaces. So we think in Africa, in South Africa, that move to urbanization, that drive is something that we are part of and we're going to embrace. The second thing is that we look at, and you've kind of mentioned this in spaces of service. When you come into environments that are less developed, like South Africa, like Africa, there's lots of risks that people take to come into these locations. If I'm a multinational sitting in Paris or in New York or in London, if I want to take a bet on Africa, usually my second biggest cost item would be space. So it'd be payroll, space, in whatever order. When you have somebody like WeWork that gives you a turnkey solutions under our MSA, that you can reduce your liability and kind of flex up and down, that's something very, very meaningful on reducing the barriers to entry, reducing friction, taking upside risk and managing your downside risk. So that's how we look at our opportunities here.
Okay, thank you. So now, Nena, looking at some of the markets that you cover in Broll, East Africa, West Africa, even other parts of Sub-Saharan Africa, what are the key things that the tenants are now asking for that they weren't really asking for, say, 5 to 10 years ago?
And I think just to go with the theme of looking at space less as a commodity and more as as a service, I think a lot of tenants globally are looking at their global strategy to drive their real estate standards and requirements in different regions and different local environments. And so where they have certain standards in New York or London, they want some of that replicated with smaller markets that they're going into. And so a lot of times we have conversations, I'll use Lagos for an example, where the global strategy might be that as you're coming into a market, you don't sign a traditional lease, you look for a serviced office provider to make a soft landing into the market and give you the flexibility that you require when your growth strategy is sort of volatile. And what we find in the Lagos market is that whereas there's been an oversupply of grade A space in the market, there hasn't been the growth in terms of serviced office space at the quality that a lot of multinationals are looking at. So the conversations that we've been having as advisors is really how can we try and meet the global goals within an environment that doesn't support it. So more conversations with landlords around maybe doing the fit out on behalf of a tenant and then rentalizing that. More conversations around structuring the deal a little different. So, we have one corporate where we've just done a transaction where they looked at core and flex space. So core space to meet their existing demand, and then flex space would be in the form of maybe a first right of refusal on a smaller space, and then having the landlord really deprioritize renting that space for maybe a year or 2 year period to allow that organization fully understand what their growth is over the first 2 years. So a lot of the conversations really are how do we implement a global strategy, but in a way that makes sense in a local context.
Okay, sure. I think what I'll be really curious to know is how have some of the landlords been reacting to this? Because obviously if an investor wants to put together a couple of institutionally investment grade office buildings and they're having to spend a lot more money to take the space from just a simple box, which was what it was before, to a more finished product, how are landlords feeling about that?
I think it differs from one landlord to another. I do believe that the more successful landlords are the ones that are a little more flexible and thinking outside of the box and trying to see how they can meet the requirements of the tenant. And so at the end of the day, maybe the risk is more on the landlords, but at the end of the day, they still are able to get the revenues back through rentals that might be slightly higher than the market. There's a little bit of a give and take in terms of that relationship, but we're finding that some of the landlords that maybe have international experience and have had to look at these sorts of situations in other markets are more flexible and more able to have those conversations. A lot of the local developers and local landlords, even in Nigeria, are still have ideas of the market, what the market was in 2014 and 2015 where there was a high, and so they're less flexible. But I think that we're seeing more stabilization in the market, or more stability rather, and we're seeing that the landlords are generally responding more positively to the requirements of tenants in general.
Okay. Now, Greg, you are active in a lot of African countries. I think within, say, countries like Nigeria, Kenya, Ghana, where a lot of the institutional investments over the past decade came in first, they're getting to a bit of a point of saturation in terms of, say, office space. When you look at the newer markets that people are now interested in, like Abidjan in Cote d'Ivoire, how do you see things happening over there in terms of occupier preferences compared to what's happening in the more established markets?
Sure. Can you hear me? Yeah. Interesting question. So we are ourselves in 15 countries across Africa. What we've seen is typically newer market or frontier markets like Abidjan or Dakar are experiencing a very high occupancy rate. I think Abidjan, we're almost at 95 or 100% occupancy rate. We are, and I would like to believe, the leading workplace service provider in Africa. we're more or less the opposite of WeWork, in the sense that we focus on Africa first, and second, we have a holistic approach to the workplace value chain. We started from workplace design and build, and then we're moving into co-working space across the value chain. And I think one thing as well that differs is also our valuation, so we're more into 10 to 50 million euros as opposed to 10 to 15 billion euros. But the point is, what we've seen is that these newer markets and more frontier market, as you were saying, are actually, funny enough, are leapfrogging. In the sense that what we've seen in Kenya is that because it's the hub for East Africa, it's a big enough economy for global occupiers to be operating their own spaces. So despite co-working being a big trend, the demand for co-working for multinational is actually smaller. So we're more looking at incubator because the size of the team kind of justify these multinational operating their own offices. If you compare Abidjan, which is obviously a much smaller town and a much smaller economy, the number of people we're seeing from multinational is quite limited. Just to give you an example, we've opened our Africa Works co-working space in Abidjan a few months ago. It's been fully let in 2 months. And L'Oréal is one of our anchor tenants. And the simple reason is that L'Oréal in Abidjan is roughly 25-ish people, where in Kenya, and we're doing the design build for them, there are more 200 people. So to answer your point is that, funny enough, what we see is that in more frontier market, in less mature market, and it's not only limited to the Francophone side of Africa, there is a leapfrog moment whereby these multinational are much more looking for a flexible solution as opposed to being operating their own offices just because the numbers don't add up.
Taking on that point, I think for Yossi, we were at the WeWork space yesterday, very nice. One thing that I found very interesting that it's almost pretty much fully let, and that's to lots of international corporates, not the smaller startups that are taking up small spaces. Can you please just give us a bit of a breakdown of what your typical occupiers are like in your current location, and how you think that will change as you begin to open new locations across South Africa first?
Well, I think first of all, you can see in our filings, you can see the breakdown. So we do report that, and we do have still reporting obligations, so you'll be able to follow that closely. At the moment, our enterprise business is normally 40% of the buildings. Here in Rosebank, that number is a tad higher, but still, the majority of our business is startups, scale-ups, independent. We don't curate, it just happens naturally. And to be fair, both sides of that ecosystem enjoys the benefits of hanging out with one another, interacting with one another, and having that meaningful interaction. And I think that's part of the draw to WeWork. For the multinationals to interact with the smaller entities, with the smaller startups and scale-ups to interact with the multinationals. And the way our community team works, they manage to activate and foster that kind of collaboration. Now, the way we operate is, as I kind of mentioned, we're a very urban phenomena. So when we come into our spaces, we have to have a big location. The location in Rosebank is 13,000 square meters. Our location just here in 155 West is 11,000 square meters. By the way, I'll just put in a plug. If anyone wants to go visit our 155 West location, our friends are at the WeWork setup. We're happy to walk you over there. But the reason why we like large locations is because we can create a community. We activate the space. We can have that dynamic feelings into it. So to Greg's point, I mean, we won't be in every sub-market or small location. We just won't. So there's niches in the market that won't be for WeWork, and also in the urban major environments, not everything is going to be WeWork. And we do that not only because of the community aspect and the vibe, but also because of the unit economics, right? Because if we make a claim that we do and we can live up to that, that we can cost save dramatically, we can do that because of better unit economics, but mostly we do this for the experience.
Okay, and just to confirm, you have a tad over 40% for enterprise customers. So those are the private offices and the large man companies.
Yes, so if you go into WeWork now and you see a third of our locations are usually common spaces, so you see that's the co-working aspect. So people hang out there, have some coffee, in the evening they might have a beer, there's foosball, there's all that good stuff. But in essence, that's a very, very small part of our business. It's literally a few percentage points. Mostly, if you go through WeWork, and I don't know if you walked around yesterday, it's private offices. And that goes for the enterprise, which we define of companies above 1,000 employees.
Okay, Nana, now looking at the occupier side again, I think in most of the African markets, Ghana, Lagos, Kenya, over the past 10 years, as a lot of the investors have come in, you found that it's shifted from a landlord's market to more of a tenant's market, and they're demanding for pretty much anything and everything that they can get, as you've pretty much outlined. How much has the fact that the market is now more of a tenant's market, driven tenants to start asking for more, or is it just the fact that people want more turnkey solutions? What's the balance?
I'm not sure I understand the question.
Sorry. So I'm saying across Africa, I mean, you've had markets shift from landlord's market to a tenant's market. Now that has driven lots of occupiers to start asking for anything they can get because landlords are under pressure. Now we also have on the other side tenants wanting more turnkey solutions. So now that we're having tenants asking for these turnkey solutions, is it just because they can, or is it because this is really how their needs are evolving?
I don't think they're asking it just because they can. I think they're asking it because possibly these are the global trends that are driving their real estate strategy on a global level. And so in all the markets that they're in, or all the markets that they're looking to come into, they want to ensure that they're aligning or standardizing what they're offering their employees, not just in the more mature markets, but in also the smaller markets, in whatever region they're in. So I think what we're seeing is it's very different in each of the African markets. So in Nigeria, where we have still very high vacancy levels, I think in general the landlords are a little more able to adapt sort of their structure for leases to meet more aligned with tenant requirements. In Abidjan, as Greg said, there still isn't a very high supply of grade A office space for the demand that's there. And so even though there are more conversations around global trends and implementing them in the Abidjan market, it's more of a landlord's market, so to say, because there's very limited supply of space. So I think from market to market, you're going to find nuances and variances and differences in terms of the way that landlords respond to tenant requests.
And now I'm speaking to vacancies in office buildings, etc. You have some landlords trying to roll out their own co-working solution, while some are trying to partner with the likes of WeWork or Greg. So how would you advise, or what type of model would you advise an investor if they have excess vacancy? What do they do for implementing co-working?
Obviously, I mean, I think tenants are really looking for the highest level of flexibility, and especially in a lot of the African markets. And so to the extent that you can have some sort of co-working or flexible office space within your development, I think it basically gives it a little better, puts it a little better in position than maybe other competitor buildings. But I think that in Nigeria, we haven't seen the same level of co-working and serviced office providers coming into the market that they have seen in East Africa. I think the rents are still very high in Nigeria, even though we're seeing that it's almost bottoming out. But you know, there's still requirements for rentals sometimes, and with some landlords to be paid yearly in advance. And so it is getting better, but there's still structurally some things that haven't drastically improved. I think that if you look at the Kenyan market, you probably have more availability of serviced office spaces, and we still have that huge gap in the West African market. So if you're a multinational coming into a number of countries in West Africa, you still just don't have the availability of the serviced office space or the flexible office space that you may require as a new entrant into the market.
Maybe, sorry, just to add on 2 points to what Nela has just said. What we've seen in our particular case, because by early next year we'll have our Africa Work solution in 10 different countries. At the heart of what we wanted to be doing is actually partnerships with developers. What we've seen is most of the African cities, even the more mature ones, developers are often first-time developers. And which means that oftentimes it's someone who's done family business, who's done some money elsewhere, who has a piece of land that they have developed. What we've seen a lot is that they're not, the developers, the local developers, is not so much in the joint venture mood, but much more on the traditional model. So, you know, being able to partner with a developer and being able to bring a brand and operational model with them, it's something that we've seen obviously in more mature markets. It's not yet the case, or we don't see it that much. The other point that I wanted to be making is, like, in East Africa, what you see a lot is actually more incubators or accelerators as opposed to co-working or flexible workplace. And this is in you know, a very different market, in the sense that your target market is really your local startup, oftentimes internationally funded, and the depth of the market is not enormous. The truth is, your startup or your local scale-up, by definition, you don't have a massive visibility on your business, and therefore it's hard to commit on a long term. So yes, there's a lot of flexible workplace in East Africa. It's actually mostly accelerators and incubators, as opposed to international co-working or flexible workplace, whatever you define it.
Okay.
Well, look, our business, we kind of created our business to allow other businesses focus on theirs. So to your point, in terms of landlords entering the kind of flex co-working space, I've seen some examples of that work reasonably well, but to be fair, you need to stick to your core competency, generally speaking. What we do acquire, we design, we build, we operate spaces. That's something we do. And we do offer turnkey solutions. But what we, in the essence of what we did up until now, what we're doing is really creating that experience, that sense of community. And that's a different set of skills than what developers normally have. So I think, you know, there's a clear separation of the service aspect, the experience aspect of what we do and what developers do. But, you know, again, it's a big market. Our penetration in the major urban areas in New York and London is just 1.2% of office spaces there. So we're talking about a $2 trillion business, and there's a lot of growth, and there's going to be different niches and different variations. So, you know, I can't rule out that you're going to see more and more landlords going into the space.
Sure. I think part of the reason why some landlords are going into the space, I mean, if you look at, say, some of the biggest REITs in the UK, British Land, Landsec, they're all coming out with their own options of co-working and service space. And that's because their business model has to change, because there's less of an affinity towards just a clean brick and mortar space. So I mean, I will find it hard to draw a clean line and say, well, landlords need to stick to one side.
There is no clean line. Look, lots of companies, I mean, we talk about the multinationals a lot, but we should be very focused that it's the whole spectrum that comes into WeWork and offerings that do similar things to us. Lots of these companies come to us and they kind of go on the dry economics, hitting the density targets, hitting the employee desk ratios. But eventually, after they go through that journey, you talk about change management, about culture, about corporate identity. And again, that's different than what you do in terms of kind of developing. I'm not saying that it won't happen. There's going to be a broad spectrum. This industry, I think what WeWork did is just kind of turn the focus on this industry. It's going to continue to grow. There's going to be a different spectrum, but we need to be kind of fair and realize that it's a different skill set. So we came into this market, and we just opened up, in August. And it's been a tough economic environment here in South Africa due to political reasons, et cetera. And we hit capacity, right? Because what we're offering here is something different, and it touches less on the hard real estate aspects, but more on the culture aspects.
Okay. I think just to add finally, I think in one of the markets that you're active in, Nena, which is you manage a financial services company. that has assets across the continent. I think what I would just like to point to or to ask is how do some of their occupier requirements change from, say, Nigeria to Kenya, to Cameroon to South Africa? How does it change?
I think I touched on that earlier. I don't think that the requirements really change from one market to another. I think what changes, it's the market practices from one country to another and sort of the maturity of the market and where they are in their real estate life cycle. So the conversations that we have is, again, these are prerequisites and our basic sort of global standards to go into these markets. And then us as advisors then finding the best way to try and accommodate those goals within the environment that we find ourselves in. So it's not generally that the markets, so the requirements change by market. It's just how you structure a deal would change market to market based on the market that you're in. Yeah, so I think that from just my experience with the financial services firm that you're talking about, as well as other multinationals that have various operations and locations across sub-Saharan Africa, that's generally what we've seen. I think that the other thing to mention is that corporates don't all have the same drivers. So one driver might be more financially motivated for one company, but it might be more about the experience or the way the lease is structured for another. So each transaction is very different in terms of the drivers and the sector that the tenant is in, and just, you know, like I mentioned before, their global standards.
Okay. Just to round up now, for you, Yossi, across the continent, where are you guys looking to be in the next few months, aside the new South Africa locations?
Well, we just have 2 new CEOs in place. I think they've been in place for 5 days now, if I'm not mistaken. So we are reevaluating our trajectory. We are, if you look at our public statements from earlier in the year, we've identified Kenya, Nigeria, and Ghana as places that we want to be, because those are locations that we think can support what we're trying to achieve in terms of having sizable, big locations. But in terms of the sequence timeline, you'll have to bear with us for a few more weeks when we roll that out. Look, in December of last year, we rolled out, we tend to roll out locations on the first Monday of the month, just kind of by tradition. So in December last year, we rolled out 63 locations in one single day. So we had 65,000 people wake up in the morning and go into WeWork in one day. So that's ferocious growth, and that kind of speaks to our ability to kind of acquire and build and operate and roll out stuff very quickly. We will adjust our growth, and we're going to adjust our immediate targets. So I think in the next few weeks, we'll be able to communicate a bit clearer where we're going to go. But we have identified those locations as places that we want to be in.
Okay. Based on your experience working with co-working spaces in Abidjan and in other African markets, why has there been such an interest in incubators? Because I know you pointed that out as a key factor for Kenya. Greg, yeah.
Sorry, what was the question?
Greg, there are lots of, according to what you said, there's a growing number of incubators, and that's the largest driver for serviced office space in the East African market. So how come it's more of an incubator and not the typical serviced office for multinational corporates?
Sure. Our experience is that there's maybe three or four markets in Africa with a real tech scene. So I'll put South Africa aside. It's obviously Nairobi, a bit of Kigali, and obviously Lagos as well. These are what we've seen is that there's quite a vibrant tech scene. There's a lot of internationally funded startups, and therefore that has driven iHubs in Nairobi and the likes of them across Africa. What we've seen in some, whether it's Dakar, whether it's Abidjan, even Dar es Salaam, all this, the rest of the cities are mostly driven by global occupiers and multinationals. Their needs are obviously different, so they're not looking at being in a co-working space, but in a kind of private, closed office. So that explains a little bit the mix in terms of the flexible workplace market in Africa.
Sure. And in terms of the sectors, is it financial services? Is it professional services? Is it tech? What exactly are the larger drivers?
So what we've seen in our own spaces, I mean, we by early next year will be in 10 African cities. We started with Abidjan and Cape Town. We're rolling out, and we have the similar analysis than WeWork. So we're going to be in Dakar pretty soon, from west to east, in Accra, in Lagos, in Kampala, in Addis, and in Nairobi as well. Potentially Dar es Salaam, we'll see. There's no, it's sector agnostic. Our tenant mix is really 50-50, so a little bit like WeWork. 50% of our occupiers are global occupiers, multinationals. They are looking for flexibility. I think when we're talking about Africa, it's co-working, flexible workplace, whatever you call it, is a global trend. I think it's a product and a service and a community that is particularly relevant to Africa, because yes, there's a lot of opportunities in Africa where we all recognize that, but there's also a lot of risk. It's also very cyclical economies, and so if these are cyclical economies, what you ultimately want is flexibility, and people are willing to pay a premium for that. I think Nigeria is a great example or extreme example of that, and so half of our tenants are L'Oreal, Airbnb, and the likes of these multinationals, and half of them are mostly local SMEs, and very often what we see is B2B businesses, so professional services and things like this. And it makes a ton of sense, because ultimately these are people working together, and so similar to WeWork, we're building a community where we see a lot of our members working together. That's point number one. I mean, the ease of doing business in Africa across the board, I mean, it's not always easy. So there's a lot of synergies by doing business with someone you trust, and that sits 10 meters away from you. And what we're developing as well is a network effect, because what we've seen as well is that there's a lot more intra-Africa business trips. And if you look at the bookings, the hotels and things like this, and what we want to develop is a brand where you can be based in Lagos and now you're doing business in Nairobi or in Cape Town or in Abidjan or in Cairo, for example, and be able to tap into this business community, which is an African business community.
Okay. Now, looking to the future about how the global workplace is being set up, we are having a lot more people using remote work, flexible spaces, working from home. How do you think that is going to affect the demand for office space and how people have to deliver commercial space to occupiers in the next 5 to 10 years?
So I think generally there still will continue to be office space demanded. I think in general what we've seen as a trend over the last decade or two is that where you had large enclosed private offices before and higher metrics per person in terms of the space you required and less amenities provided, we're seeing a flip where there's more open space, less on the head count to seat ratio, and then less, but then on the flip side, more touchdown spaces, interactive spaces where people are innovating, et cetera. So in terms of maybe the requirement, yes, you're more efficient in terms of the actual workspace, but then you're providing a lot more space for people to feel comfortable to stay for longer hours within the office.
Okay, thank you.
You can thank your panelists before we leave.
Thank you very much for...
Thank you, it was a pleasure.
I've stolen your thunder, unfortunately, but we are under significant time pressures, but a big thank you to each of you for contributing and sharing your views, and of course, painting a picture of the future of workspaces across the continent. Dolapo, a great thank you as well to you two for moderating, sir, and to the panelists. Please give them a warm round of applause as they make their way off stage.